everyone, welcome to the weekly review. Another quite eventful week. We had first jolts with a very cold print, way below expectation, that made yields drop and gave us this low here. And on Friday we had the NFP data and unemployment, which came in very cold as well, but this time it's a reversal in the trend, meaning economy is still hot, job market is still tight, and this means that the Fed is more likely to uh, not cut. When the Fed cuts, they don't they don't cut like 25 basis points. When they cut like 75 basis points per meeting. They cut multiple times, like we see something like in the span of 6 months a minus 2-3% in the interest rates. Uh, when we zoom out, in general, hiking cycles can be slower, can be fast. It varies quite a bit. But when we start cutting rates, they drop off a cliff, and this time will not be different. Like if the market has priced in 100 BPs of cuts next year, and this is why yields dropped and why we had the rally in IWM and DIA. If this does not become reality, eventually bad news will become bad news, meaning at some point growth is affected and the market will start worrying about that and start dropping the market. So, but until then, we will get more of the same of what happened this year, and that is a Mag 7 driven rally. Because if the economy is hot and unemployment, jobs market in general doesn't roll over, then it means what has been working will continue to work, and what has been working is Mag 7. It's like the tech value names, quote unquote, in which they are considered to be safe havens and are likely to continue to do so. So Tesla, Apple, Nvidia, Google, the Magnificent Seven. What what can vary in its performance? So it doesn't mean that everything will go up a lot. I would expect a couple of the names to go sideways slightly down, and a couple to be big winners. I'll talk about which ones when we get to it. But the point is, expectation is that we grind up and it's gonna be a Mag 7 driven Santa rally unless some other data sets come in that contradict this. And the big data set next week is gonna be the CPI print. A cold CPI print, meaning negative print this time. The expectation is 0 and 3.1 on yearly, will give us an even rally, probably more focused on IWM and DIA. Like let's say we had -1 month over month and 3% yearly. I think IWM and DIA outperform, but that's relatively unlikely. And if we get a hot print or meets expectation, I would expect the Santa rally will give us a FANGs driven rally. Okay, now let's look at what I think will happen. Uh, for next week, slow grind up. This obviously will depend on the CPI print and FOMC, but FOMC is a nothing burger. Whatever reaction we get for CPI, that will be what dominates everything else. What J. Powell says during the FOMC doesn't really matter. They can be bearish, they can be bullish. The market saw the data, meaning the jobs data. The market will see the CPI print, and they will ignore what the Fed does. Basically, they will follow, as of now, hot jobs market. If this is confirmed by CPI dropping further. That's Goldilocks, and the market will be very happy and continue what it's been doing this month. If CPI comes in a bit hot, but the jobs market is still hot, uh, they will go into value safe havens, meaning the max 7. Okay, so expectation here, we get a pullback next week and going into Christmas. It's gonna be an illiquid week next week for the second half most likely. This is possibly over expectation, so it might just be 455, 456 to finally tag this AVU up, and then a vertical rally in this last week of the year and the first week of January. Okay, QQQ. My expectation was that we would hold on this level here. I still think that we tested it once, bounced off it. Could again next week is kind of binary for tech. Either tech breaks out or tech retests this level here, depending on the CPI print. I think it's more likely for tech to break out. So this is no longer that accurate, but shouldn't see us go that far. Maybe a 400 next week if in the Goldilocks zone. Other than that, sideways should be fine. So not necessarily like that, but something like this. Basically go nowhere the entire week, have a pullback, then go up to 400 post OPEX. IWM and DR are a bit more complicated because it depends on the CPI print a lot. Like I said, flawless disinflation is positive for IWM and DIA. A hot CPI print is positive for tech and negative for IWM and DIA. So we have the sideways scenario or the drop scenario. DIA is still overextended and I don't think it will move yet. So I think it goes sideways for quite a while, does a pullback, then retests the highs. And IWM, we reached the target I had for pre-OPEX, and now it's going sideways. Again, I kind of expect sideways movement, go in this range between up to 190 and as low as 182. If if you get the Goldilocks scenario for IWM, target remains this 196 to 200 area for later in the year. Okay, oil. Hot jobs data and flawless disinflation are good for oil. I think we have bottomed. It might swing a bit here for a couple of days, but eventually it has to go up. We also have that Gunaya, Guyana, my bad, Guyana situation with another potential war in South America. We'll see how that develops, but other than that, it should be fine. Then yields. Hot jobs market means the Fed will be hawkish. Uh, Maybe a very cold CPI print will make JPOW sound a bit more constructive and not be very hawkish, but I don't expect that. Like if we get on expectation, meaning 0 month over month and 3.1, 3.2 on yearly, core CPI will still be at 4%. So I think JPOW's message will be we have more to do, we have more to do. So the market has to unprice the cuts for next year. Like I said, we either cut a million, cut everything, or we don't cut at all um, when we get into next year's cuts. The market might eventually reach the conclusion that we get no cuts, and that's gonna be cause a big pullback. But we're still a ways from that. And until then, the market, or at least the bond market, will listen to the Fed, and they will take the 10-year probably back to 4.5 is my guess. 4.5, 4.6, something like this. Somewhere in this area. 20-year at 4.8, 4.9, something like that, the 20-year TLT. So where does this leave us for TLT? This is back to 88, 89. say, let's call it 90, with potential to go to 88. So this is where I would like to re-enter TLT calls, and that's kind of it. Now, the interesting part is with Fangs. Question is, who will outperform on the year-end rally? And I think it's gonna be Tesla. Hmm. We're getting, we had multiple attempts to break out, one, two, three, all got rejected. Now we have a fourth one, and I think it's looking very, very nice. And I'm quite certain we will see a breakout in Tesla. After this much of a consolidation, the breakout is gonna be significant. Uh, and the minimum I think we see is 314 here, 315, sorry. But I think it goes much higher, like for 360, something like this. When Tesla moves, it moves a lot. Like that's 39 days, 40 days, something like this. It should be something like this. This was 15 days, and we have 15 days, a bit more. Like we have 3 weeks, 4 weeks until let's call it 4 weeks. 1, 2, 3, 4 weeks. We have 4 weeks. Tesla can go up a lot in 4 weeks. If we get this breakout, it should be quite quite fast and a lot. And I really really like this accumulation here. It hasn't pulled back. It's one of the names in mega caps that have that have pulled back significantly in the past couple of months. The others didn't. So this doesn't come from overbought for a breakout at overbought. It's coming for a very nice place. RSI is stabilizing above 50, and I think there's a big chance that Tesla breaks out next week and just keeps going and going and going. Now, the second name that I think has a good chance to break out is Apple. Apple is not going to be this that spectacular. I would expect 216 to 220. But I like what's happening here as well, and it looks to me like a rising consolidation into another breakout. Let me see if I can find an example. Don't see anything. Don't see it here. Something like this here. See this rising consolidation and then another leg up. This looks similar. This piece here. Rising consolidation. This got rejected, but I think this time it has a much better chance. It's not divergent as much. Uh, RSI pulled back. It has room to go up, and I think it is going to go higher. The third name that is probably going to do well is Nvidia. Target is to retest this trend line here, like 550. And then we get to the middle of the pack. Middle of the pack, which I don't know. Uh, if everything goes up this much, the market will surge up, and I don't think that's possible. So to actually be consistent between my target of 400 QQQ, let's say, and Tesla going nuts to free whatever, and Apple going nuts to 220, then it means some of the other names will underperform. And the candidates for underperforming are Google, Amazon, Microsoft, Meta, and that's kind of it. Netflix as well. That doesn't mean they will drop, but it means they should go sideways slash down. Uh, Google is my least favorite name, but I might be wrong here. I just don't like it, and I still see it consolidating here. This is still sideways movement, and I don't see it going out of this triangle by year end. So either it breaks out to the downside, I think, or it just goes sideways and doesn't do anything. Amazon, kind of the same situation. It looks a bit more bullish than Google, but I don't see it going uh, up yet. I think it should be going sideways or down. Same for Microsoft. Microsoft is a bit more bullish. I would see it consolidating here, doing something like this, and eventually maybe breaking out, but not just yet. Meta is the one I like the least. I still think this is like an ascending formation that should be should be breaking down, not up. If this were to break out to the upside, it would be a colossal move, like up to 400 plus, something like this. So I just don't see it happening. It doesn't have enough time. The expiration for Meta in January is absolutely huge, like 35%, 40%. It won't have the steam to keep going. So I think sideways slash down. Some of these names should break down before the end of the year. Uh, just like in the 2021 top, they some of them broke down earlier. Like the top for Meta was September 21. September, sorry. The top for Microsoft was November. The top for Amazon was November, but it has been going sideways for quite a while. Google top, it was February 1st, whatever. It was going sideways like here. So this is what I expect will happen for these names. Nvidia's top was in November. Apple's top, November, I think as well. Yeah. Apple was going sideways for a while. Netflix top was November. All of them, or most of them, topped in November. Okay. And Netflix, kind of the same thing. It has a pullback. I would expect it to go back up and retest the high, and then just go down and retest this here. And XOM, I posted on Twitter that I started opposition on Oxy, and the reason why Oxy over XOM is because of the Guyana situation. XOM has actual assets there, and are the one exploiting the oil fields there. So even if a war starting is bullish oil, uh, because they lose assets, it might cause the stock to drop, even though oil will go up. So I chose to avoid that risk and went with Oxy instead of XOM. Can see a bit more consolidation here, like this didn't, the next leg didn't start for a while. But I even if it didn't start for a while, it went to a level that I you could have taken profit on. So I'm not playing this for this. I'm playing it to go to the equivalent of this, maybe take some profit. Should be fine. Look at the names I posted on Twitter this week. So Oxy, this is the Buffett entry point. If we ever break down below this horizontal level, that is the target going back to 40, 75.5, 40. But for now, I'm happy with the purchase. Like I said, target 1 at 60, target 2 at 62. XLE goes to this, and nothing really to comment about. The Costco one is interesting. So my expectation is that Costco will have a negative earnings reaction and break down. Let me show you Walmart on top of, not on top of it, but separately. Basically, Costco is here on the Walmart chart, or potentially here. We haven't seen this rejection, but Walmart looked very, very similar to Costco. So we are either here or here. This is my assumption. And in both cases, we had a pullback that was visible. And reasoning is also because it's the only retail name that hasn't corrected from the US names, the big specialty stores, retail tail names. And I would expect to go back to the trend line, go back up, eventually break down if things go really badly. Okay, Neo, I still like this name. I I I am probably gonna open a position on Monday. We had yesterday the Chinese CPI prints. Bad, -5 year over year inflation, so deflation. Month over month minus 0.5. This is huge deflation annualized. And the market is likely not going to like that. I liked this setup TA wise on Friday, but I refrained from buying anything because of the weekend print for the Chinese CPI. So I think it goes down to 7. I'm going to be looking at 7 to see if I can buy. And that's kind of it. Expectation that it goes up as well. For Echo, I think it was a long-term chart. Yeah, this is the cup and handle. I expect it will go sideways. This is already divergent. It will go sideways for a short time before it eventually has a significant pullback, after which it will go for the breakout. UNH. UNH and LLY are on my naughty list. Trend line for RSI looks really bad for it. It's divergent here on the long-term charts, and even on the short-term charts, it looks quite ready to get rejected. So I don't see it coming down, and the UNH and LLY are top names in XLV, so it's not looking that great for XLV. Top of the range, didn't buy a position yet. Will look for an entry for OPEX probably. I would expect them to underperform on OPEX and take it from there. LLY kind of the same situation. There were two scenarios that I thought could happen. One was a breakdown then, which we didn't get, then backtest and go down. So this one goes away. Or we go back for the trend line here, test it once, get rejected again, and then that will seal the deal and will push it uh, below the trend line. And once the trend line goes, it will go down a lot likely. TLT talked about it. Lift looks like we have a breakout. We had a breakout on Friday. We'll see if it has follow through on Monday. Still, because it came at the end of the day, it can still get rejected. So don't it, we can there's still a possibility to consolidate more here before it actually goes hard. PayPal, there was that news about Amazon ditching Venmo or something like that. This looks like a consolidation. Still think this stands, so buy at 55 if we get it, and then wait for it to make the move. It's a matter of time. Okay, That's it for this week. Have a good one. Bye bye.